Hello, and welcome to another Daily Dose of Insights powered by Container Exchange. My name is Christian, and every other day we bring to you the key news, stories, and data points that move container markets and hence your business. Today it's Monday, so we have what we call Macro Monday at Container Exchange, where we typically take a look at the week ahead and what kind of macroeconomic indicators are to shape the markets this week. Let me quickly share my screen to give you a little bit more guidance of what I'm talking about. Today, already in the morning, at least morning CET time, we have already had Chinese inflation rate data being released. There was a small but significant increase to 0.6% year on year versus a 0.5% forecast. But for everybody who's now saying, yes, this is good signs that sort of deflationary pressures in China are easing and in some form of small inflation is returning, those have to be disappointed. Most of this inflation rate uptake was really on the base of higher food prices because of weather disruptions and hence sort of supply constraints, and not on the basis of stronger domestic demand growth. If you look at Chinese producer price data or inflation, this decreases significantly, minus 0.8% versus a minus 1.3% forecast. So their deflationary pressures still exist and are strong at force. Then on Wednesday, we have US inflation rate data expected at roughly 2.7% versus 2.9% in July, so the previous month. And then on Thursday, we have the ECB with their key interest rate decision, widely expected a 25 basis point reduction from 4.25% to 4.0% is expected. And that's also sort of a little bit of a precursor of the Fed decision next week. Already this week, a data point that on Thursday, US initial joblessness claims expected relatively stable at a higher level of 230K, supporting calls for a 50 basis point reduction by the Fed next week, because that's the biggest discussion in the market right now. It's pretty clear that the Fed will decrease interest rates, but by how much is the million-dollar question. It's either 25% basis points or 50 basis points, which would enable the Fed to really front load some of those reductions that are to be expected over the next 6 to 9 months. Now, that's it from us for today. All of this data, of course, via sort of demand, via impacting demand and demand growth, significantly impacts the shipping industry, freight rates, container prices, and so forth. And we've already seen that the market has turned. Now we seem to have too much capacity again in the market, just like we expected a couple of weeks and months ago. So that spot prices are tanking, for lack of a better word. And of course, the question is, how will that play out going forward? Maybe some of these data points do give some clarity on that. Now, that's it from us for today. Thanks a lot for tuning in. Have a fantastic week, start of the week, and see you on Wednesday. Take care.